Hey gang, in our previous video we introduced the proper journal entries needed to practice the allowance method for accounts receivables. Now we're going to take a look at an in-depth example of how to calculate the estimates based on the percentage of receivables method. Remember gang, both the percentage of receivables and the percentage of sales methods are options available for us to calculate our bad debt expense as well as our allowance for uncollectible accounts. So let's get to it. But first, so in terms of percentage of receivables, you must remember this one key valid point. Whatever amount is calculated must become the allowance for uncollectible accounts ending balance. A company is going to estimate a percentage of uncollectability, then multiply it times account receivables ending balance. Whatever that number is must become the new allowance for uncollectible account balance. Therefore, if a previous balance exists, an adjustment must be made. So without any further ado, let's take a look at an example. Okay gang, we're gonna take a look at how to properly estimate using the percentage of receivables method under the allowance method. And so we're gonna use this beautiful illustration to get to the right answer based on what we spoke of in the previous lectures. So, the year-end 2021 accounts receivable balance for It's a Joke was $30,000. During 2022, the firm earned credit sales of $300,000 and collected $200,000 on account. It's a Joke wrote off $5,000 receivables as uncollectible and estimated 5% of accounts receivables as uncollectible. So, the requirements are as follows. Assume It's a Joke had an unadjusted $2,300 credit balance and allowance for uncollectible accounts at December 31st, 2016. Journalize It's a Joke's December 31st, 2016 adjustment to record bad debt expense using the percentage of receivables method. And the second requirement is assume that It's a Joke had an unadjusted balance of $1,900 on the debit side of the allowance for uncollectible accounts at December 31st, and they want you to make the journalized adjusted estimate as well. And so before we dive into this, let's always identify the keywords, gang, out this illustration. So we say year end 2021 accounts receivable balance was $30,000. During the following year, 2023, credit sales of $300,000 and collected $200,000 on account. It's a Joke wrote off $5,000 receivables as uncollectible and estimated 5% of accounts receivables as uncollectible. So a couple of things, gang. The fact that it said that it estimated 5% of accounts receivable as uncollectibles, that let us know we're doing the allowance method. Because remember, the allowance method estimates. So even if the problem didn't require you to do that, you already know where you're going from that keyword estimate. Remember, we have two ways to estimate: percentage of sales, percentage of receivables. And we know because what it told us that 5% of account receivable drive us to do the method percentage of receivables. And so we know whenever we're applying the percentage of receivables method, we must consider the ending balance of accounts receivable. And so they've given us several illustrations or effects of accounts receivable that must be adjusted. So if we look at our accounts receivable, we started out at the end of the previous year with a $30,000 balance. That's our beginning balance for 2022. Then the firm earned credit sales of $300,000. Credit sales meaning just selling on an account. So that's going to increase our accounts receivable on the debit side by another $300,000. And collected $200,000 on account. So we know anytime we collect on our account, our accounts receivable will decrease on the credit side. And lastly, it said that It's a Joke wrote off $5,000 on receivables. Anytime that we are practicing the allowance method and a write-off occurs, we have to remove accounts receivable off the books and the contra account allowance for uncollectible. Therefore, the proper journal entry for a write-off consists of a debit to allowance for uncollectible accounts and a credit to accounts receivable. And so the $5,000 written off decreases the accounts receivable on the credit side. And so that seems like it wraps up all the transactions that affected our accounts receivable. So our new year-end accounts receivable balance is $125,000. Therefore, if we multiply the accounts receivable times the estimate, that's going to give us an amount of $6,250. And remember what the rule says when we're practicing percentage of receivables. Whatever the amount calculated, it has to become the balance. So we will adjust based on the balance previously that was given to us. And so in the requirement for number 1, it told us that we had an unadjusted amount and allowance for uncollectible account balance of $2,300 on the credit side, gang. But based on our new calculation, it tells us that our new balance must become $6,250. And by the looks of it, gang, we know that we have to increase our allowance for uncollectible account by $3,950. So this is going to be the actual estimate amount that is necessary to be made. And so we know anytime we make an estimate under the allowance method, we're going to debit bad debt expense and credit allowance for uncollectible accounts. And so we've already calculated that particular adjusted amount that is needed, which happens to be $6,250. And so that wraps up the requirement for number 1. And so in terms of the second requirement, we must assume this time that we have an unadjusted debit balance on allowance for uncollectible account of $1,900 instead. So all of the previous calculations to get to the proper adjustment are still correct. The only difference is now our allowance for uncollectible account balance has changed. So instead of being on the credit side, this time it's a debit balance of $1,900, gang. And so how will we adjust that? The same rules apply. Allowance for uncollectible account has a normal balance on the credit side, meaning that it grows on the credit side. And so based on the calculation of the estimate, we still should have at the end of the period a credit balance for the allowance for uncollectible accounts of $6,250. But since it's on the debit side, it seems as though that our adjustment will have to be for $8,150. Therefore, we are going to debit bad debt expense and credit allowance for uncollectible account for $8,150. And so although the requirement didn't ask us to complete this, I like to show you guys how accounts receivable will be reported on the balance sheet. And so we're going to report this at its net realizable value by taking the accounts receivable ending balance, which is $125,000, and subtracting the contra account under it, the allowance for uncollectible account, which balance happens to be $6,250. Our net realizable value on the balance sheet should be a total of $118,750. So there you have it, gang. A proper, quick, and easy way to calculate an estimate based on a percentage of receivables method under the allowance method. Hopefully it all clears up and you are able to compare and contrast the difference between the percentage of sales that was in the previous video and this video regarding the percentage of receivables. If so, please like, subscribe, and share the channel with your friends so they can chase the bags as well. As always, gang, it's been a humble pleasure to have you guys spend your time with me. I really appreciate that, and I look forward to seeing you soon. Bags!